From there, it's just a case of just watching and waiting, holding price until we've reached that final target. Nice, easy trading using the higher time frame momentum in order to get us into a trade.
When I first started learning about trading, I was trading smart money concepts like everybody else, thinking I'd cracked the code to how the market moves. But the deeper I went, the more I realized that the very people that were teaching those concepts were the very liquidity that the institutions were targeting. I was following the same patterns, the same entries, and I was getting played over and over again, just like thousands of other traders out there. Then everything changed. Once I understood how institutional liquidity actually works and how the market is engineered to manipulate the smart money traders, my whole view of the market flipped on its head. In this video, I'm going to show you exactly how to use institutional liquidity to trade against smart money traders. The methods that I've learned the hard way over the last 10 years and the hidden manipulation patterns that most traders will never see. Make sure you stick around right to the end because that's where I'll break down one of the biggest traps institutions set every single day and how you can flip the script and start using the same liquidity for your own trades. Let's get into it.
This is the exact setup and model that we used to catch this 5% trade on GBP USD yesterday on Monday, the 11th of November. So before I get into any trade, I'm always looking at where the liquidity is moving from and to. That for me is the most important thing. So I start my analysis always from top down. So I'm looking at kind of where liquidity's been swept. So you've got a clear liquidity move here. That's an external liquidity sweep. Once we have that external liquidity sweep, we then can see a really clear, bold, bearish move. Now, down here, we've also had an external liquidity sweep. So, sometimes you can look at that and be maybe a little bit confused as to what you should do next, how you should play it. Well, the smart choice is that you sell from here and you buy from here, because that's premium pricing where people are going to be selling from, and that's discount pricing where people are going to be buying from. But if I'm looking at the overall structure to this marketplace, you can see that we are very, very much bearish. So it's a simple case of my bias has to be bearish. Nothing in here indicates to me that we're going to be going long. If I were to get structure like this, then my bias would change, of course. But right now, my structure is very clearly bearish and pushing bearish. So we've taken external liquidity, we've then pushed down, we've taken external liquidity again, and we've pulled back up. But my expectation is still that we're going to go bearish because the structure shows me that we're bearish. So, liquidity first, market structure second. So many trading strategies that you learn train it the other way. They say market structure first, liquidity second. It's the wrong way around. 96% of traders never get funded. And if you failed before, it's not your fault. Prop firm challenges unfortunately look fantastic and sometimes very easy, but are actually more set up to make you lose. That's how prop firms make their money, remember. But what if I told you that we had a system that flips those odds in your favor? Retail traders chase patterns, funded traders follow liquidity. And that's the difference. If you're over trading, relying on random indicators or risking too much, sound familiar? You're making it harder than it needs to be. One clear method, step-by-step guidance, and a proven approach that helps traders get funded fast. We've already secured over 1.2 million in funding using this method without gambling, guessing, or wasting years trying to figure it out. Luckily for you, I'm the one who wasted those years. I spent 6 years trying to find profitability, and now after 10 years of trading and quitting my day job, I put together the Prop Firm Blueprint to help you do the same. If you want in, we're currently opening up a few spots in our early bird mentorship. Now, we don't officially go live until the 1st of April, but everybody who joins us before the 1st of April will get access to a 25,000 challenge account when they complete the mentorship. We are that confident that we will get you funded. And if you don't, if you follow everything we teach you and you do not get funded at the end of it, we will give you your money back. Now, spots are limited, so this isn't one to wait on. Tap below and start your journey with us today. Liquidity has to be the driving factor. We've taken liquidity from the buy side, we've then effectively moved down, and we've basically created a new range that if we jump down to say the hourly time frame, we can see that we've got a new range, a new bearish leg that we can use to verify and support our trades. Now, we don't need to get in at the reversal points. That's actually, a really amateur way of trading. If you're trying to get in at reversal points all the time, then 9 times out of 10 you're going to get caught short and you're going to lose your money. You need to be trading in line with the momentum, and you need to wait for the market to do the reversal. so to complete that move and show you bearish price action before you then enter a trade. And remember, you only need a little bit. You don't need, this is why we use the higher time frames to give us our bias, because you don't need a huge amount of direction. You don't need a huge amount of pips in order to catch a good trade out of the marketplace. So just then jumping down to the 15-minute time frame. So now I've got my bias. I can see that, Thursday, Friday, we've clearly shifted. So, I'm looking for a bearish setup because my market is bearish. Yes, I've had this pullback up here. That's absolutely fine. We can have that pullback. But then what I'm expecting and I'm waiting for a bearish leg to come into the marketplace. So we get this bearish leg here. So you can see this. This then gives us confirmed bearish structure. Okay, so now very much so I'm confirmed bearish. So for me now it's just a case of I need to find areas that I'm going to be, interested in taking trades from. Now the 15-minute is where I'm looking for these trades. So I'm taking a trade after liquidity sweep. So I'm waiting for 15-minute highs to be invalidated like this, 15-minute highs to be invalidated like this. And what this shows me is that I've got institutional input in this market. I'm having 15-minute highs swept and then new structure created down here. New structure created down here. That for me is really clear institutional input to the bearish legs. They're taking out the highs and sweeping liquidity from the highs. They're then pushing the marketplace down, which means they're pulling the market up in order to get higher prices. They're taking out liquidity and then they're creating new lows. That shows us that we've got institutional input in the marketplace. We want to be trading in line with the institutions. We're trading in line with the strong money, okay? So when we come into the marketplace down here and we have this 15-minute liquidity sweep, which is here, and sometimes you see they won't be particularly huge. You've got to be ready and waiting for them. Once we have that 15-minute liquidity sweep here, it's just a simple case of them waiting for our setup. So we've got two areas that we could look for. So the original move that's taken this high to the left, okay, that would be our first target. So we mark that on as TP1. Then the external move that's created the entire pullback, that would be then our TP2. Okay, so we've got our target set. We now just need to find an entry. Now we find the entries on the 1 minute time frame, and I'm looking for a manipulation setup. So a manipulation setup is structure being printed. Okay, so bearish structure, and then an internal manipulation, and then a push away. So something like this. Okay, that would then signal us into a trade. It's a really simple entry criteria. It's really, really profitable, and it works out really regularly. Okay, so what we then have is we have that 15-minute liquidity sweep. Okay, we have this breakdown here, structure, 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 and then we're looking for a manipulation. So that's our manipulation there. Mark that on red so we can see where the manipulation is. And then we're just looking for a move away from there. So we can place our stop above here. We get that move away from here. Jump back up to our 5 minute time frame. First profit target would be down here. Okay. And I think actually we got in a little bit later because we got about 5-6% off this trade. So it's about there. So I think we waited for maybe a 3 minute engulfing. Yeah, that was it. Okay. So you've had your manipulation here. Okay. You can see that clearly. Structure, structure, manipulation, push away. Okay. That gives us a real clear indication that we can get into a trade. We can get into a trade. So we can place our stop there. Sorry, place our entry there and our stop there. Like I said, it was about 5.5 we came out this trade, so we must have got in around here. We have an initial push away. We don't typically move to break even until we've taken that first take profit. So the first take profit would have come out here about 3.1. So that would be our first take profit. We take 80% off the trade here, and then we hold down for that external level. Okay. This is the exact setup that we use in Strong Money Forex. It plays out really, really regularly. It's a really, really successful trading strategy. We're using those higher time frame momentums, medium time frame liquidity points, and then lower time frame entry models to get ourselves into better trades. Cheers guys, catch you in the next video.